Hi, Ron. It's Stuart here again, and welcome to Monday. It's the first full trading week of the new year, 2025. The sun's actually shining outside of my office window here. I'm actually in my home office today. It's been freezing here in London. I hope things are better where you are. I'm going to start with the dollar index this morning. We just got some data coming out as we speak. The final reading of the US PMIs. Let me just come back to I think that should literally as we it's not playing game. Let's have a look. So a bit worse than expected. The services number for December is coming at 56.8. It's coming at 55.4. Hope you can see that on the calendar there, and it's worse than expected. It's a bit not as it's better than last month, or a mixture here. We had a bit of a mixture like that with the European ones this morning. They were generally much better than expected. You can see here Italy, France, Germany, and the wider Eurozone one, 51.5. So it's back to expansive mode here. This is 51.6 from under 50 here. So generally better than expected. The services sector, led by the Chinese first off this morning with better numbers. So services sector it's doing a little bit better, but it's still not enough perhaps to compensate some of the weakness that we've seen in the manufacturing sector, and that's to expand. The other major news this morning has been the German federal states release their inflation separately, so it all gets composited together later on. So inflation's come in a bit higher than expected in Germany, again in line with what we've been seeing across the globe. Really, this big move down we had in the second or the middle part of last year sort of flattened out, and we start to see the stickiness of inflation coming back over this 2% target. We know 2% target in Germany, but the trend continues to sort of tick back up. So bit of a mixed bag data-wise. So positive service PMIs, inflation proving sticky, which is back on, services. It's what's driving most economies, and therefore feeding through to wage demand as well in that sector. And that's what's been sticky within the inflation sector, and that's what we're seeing here. And Germany being a good example. I remember Germany, the manufacturing sector, very, very on a back foot at the moment. So across the pond in the US, I say the services have actually disappointed. Although they're leading the other major industrialized nations, it's been a bit of a mixed bag, bit of miss that for the PMI data. How that's actually impacted, I'll come back to that in a minute. The dollar, we shall see. The big move we saw this morning down against the dollar. Remember on Friday we were at a gung-ho. We went through 109. We've got as multi-month high here for the dollar index. Drifted into close ahead of the weekend, and then we were down this morning. And then there's an article in the Washington Post earlier on this morning saying that some aides of Donald Trump were looking at potentially only looking at tariffs on major critical. We saw that big crash here on that news breaking from the Washington Post this morning. Better European PMIs helped the dollar in, put further pressure on the dollar index. So remember, the euro is 56% of the dollar index. This is how this weighted index is composed. And then in the last hour or so, Trump has woken up and come back on through social media saying that's not the case. He's not going to relinquish his promise to slap tariffs across the board on America's trading partners. So dollars picked sort of weakened again. Picked back up on that comment from the president-elect. Just about here on the indexes, let's have a look at the Dow. Dow was benefiting from all of this talk of a potentially weaker dollar this morning. So we went here on the hourly chart on Friday. We went through the 50-hour and the 20-hour at the same hour on Friday, and we continued to accrue to the upside. So we've recovered and testing 43,000 is the next line in the sand for the Dow. Here, the S&P 5,000 has already covered its next major round number handle at 6,000 this morning. Again, a big spike. This is an hour earlier at 2 o'clock on Friday afternoon, and we've continued to rally during the Asian and European trades this morning. And so stocks are back up, and the Nasdaq similarly back over 21,600 in this hour. On the back of the potential chatter of the weaker dollar. Trump's intervention hasn't pulled stocks down. Stocks have been open about 20 minutes. And let me just check the cash markets. That's obviously derivative markets. The cash markets are relatively in the green. So Nasdaq's up 1.57%. The S&P 5,000, as I said, having accrued or broken back through the 6,000 level, is back up 1.03%, up 62 points, and the Dow is up 200 plus points. Tesla was up 6.7%, I think 6.7%, 6.3% on Friday, having had a torrid few days to the downside, and Nvidia was up another 3 and a bit percent. It's up 3% again this morning, and Tesla on open is up 2.73%. They're the big movers. Google is also up 2.32%, and then the Nvidia bid has helped other AI stocks. Broadcom's up 3%, and AMD is up over 3.2% as well. So stocks, particularly here in the Nasdaq 100, helping to lift the US markets this morning. The DAX recovered 20,000. It's come back to it on that on Trump's denial of messing about with or relinquishing any promises on his tariffs. You can see we've been very much sideways action here. A bit of a weak end to the year for most stock markets, but the DAX here. This is the daily on this. Sorry, it's the 1 hour on the DAX. There's that big stick up on the Washington Post news, and then we've come back down to test the 20,000 level. We're holding it 20,098 so far for indices. So I don't want the panel down. I'll make sure you can still see me. So as I say, main news of the day is that PMI cluster of data. So let's have a look at what the forex markets are doing. We had some big moves this morning against the dollar. As I said, that's all been retraced. So let's start with the Aussie. Remember, we were very much in a big old downtrend. That's still the case. Although we're into our third up day today, and a quite strong day by the looks of things. Remember, it's lots of people have been away. Markets volume noticed this morning, certainly in London, volume picked up very significantly from last week. This morning, as we saw a move against the dollar. So the low of 61.75 we saw last week when we went on a .62. It's been taken out, and we're back at 62.67 currently this morning. But again, here you can see on the daily time, still remains very much below its 50-day moving average, which now was 64, and even the 20-day average we tested today. So see where that how that plays out this week. Will the dollar continue to win? Obviously, a big week. We'll come on to that in a minute as well. Plenty of jobs data, plenty of other peripheral data, and then we got non-farm payrolls on Friday as well. But more as we go through the week on that, my friends. So Aussie having a good day, although still remains in a very much in a downtrend on a higher time frame. So is that consolidation on Friday? But again, the 50-hour here has helped us. The 20-hour has been a bit less. So last break here on this strategy was on the close, actually, interestingly, on Friday night. Followed through this morning on the open, and we've been to the good ever since. Big move down, but we're still that's still long here on that hourly chart. But stop loss will be around about this Actually, stop loss would be down here still, wouldn't it? Yeah, down there. I haven't pulled up to the 9 period. So 63 was a step too far so far today for the Aussie, but up positively. Dollar CAD, rumours, or not rumours, but a couple of press reports this morning saying that Trudeau could actually resign within the next couple of days, as early as the next couple of days. How true that will be, we'll see. Has been under tremendous pressure. His Liberal Party is under a lot of strain at home in Canada. Are becoming very unpopular from what was a very popular prime ministership, but hasn't really helped the dollar CAD too much. We're still in that consolidation mode, although we have plundered the 5 and the 9 moving averages. Look to be crossing today, having got just can't get above this. We mentioned it a while over the last couple of weeks, and we can't get over this 44.50 zone. So big down. Obviously, the day's not far from finished, but that news from Trudeau's disappearance from the political scene may ease things for the Canadian dollar, but we'll see. Big up day here for dollar CAD on the 18th of December. A classic sort of consolidation at high situation. So, but we are at 56-month highs. This doesn't go on forever, but the trend is still set, and the 20-day average, as I said last week, sits at 143. So a break of 143 will perhaps turn this first short trade from this big long uptrend. Will still be open. We'll still have a long position open. Maybe we'll have closed as we consolidate in this area here, but patience is key. So 143 key dollar CAD going forward. The yen got to one. If we got the daily time, there we are. We got to 157 this morning. 150. Sorry, but then a strike. Let me start again. We got within a smidge of 158 on Friday, and then we've come down quite significantly. And again this morning we got up to 150, within 150, 3 or 4 pips of 158 this morning. Before that Washington Post article broke. Dollar weakened. That was all dollar weakness rather than yen positivity, and then that's been brought back on Trump's just now on this last hour. So they're very much not very difficult one to trade, this one here on this 1 hour time frame, because we're chopping all over the place. But again, if you look at the daily time frame, you can see we're still moving up higher, and again another one like the CAD consolidating at high. So this could break out either way. A break over 158 will then bring in 160, but these are, we've talked about 56, 58 month highs for dollar CAD. These are 33-year highs, 35-year highs for dollar yen up at these levels. It's 162. Yeah, just hang on to your horses if you're still long on this pair on the higher time frames. Lots of chopping about. Obviously, we've got this divergence in policy. The Bank of Japan still dawdling about raising rates. The US now 38 points, 50 points, something like that. Likely for 2025 is what the markets are saying. So dollar CAD, dollar yen, another one consolidating at highs, and having quite a choppy day as we've had recently. But 20-day now 155.90, so 10 pips below 156 for the 20-day moving average. The 50-day moving average, you can see there, over 154. Euro, as again we said last week, didn't we? Marked a new low for or the low for the year so far. It doesn't sound much, but it's coming in as 13-month low here, 102.25. The euro dollar got to on Thursday. We recovered Friday, and we're a strong recovery today, taking us back over the 103 area, which we couldn't quite break on Friday's close. Strong day today on the back of the positive PMIs out of Europe. The negativity surrounding the dollar earlier, and then Trump's intervention, if we've got the hourly chart, has sort of brought that back a wee bit, but we're still holding 104 now. Oh, we're not holding 104 now. We did get up through 104. So back through 103 today, and another 100 pips plus to 104.35 today. So it's a good day for euro dollar bulls. Again, this one was triggering, sort of looking for strength into close on Friday. I didn't take anything on there. I was still, I think, nothing that should have added to this position here, but I don't think it did. That was the opening position this morning at on the 7 o'clock candle, closing at 8 on the UK Open. European Open, I should say, and then that's rallied quite nicely, and that's stop. I have to check my system, but stop loss might have been taken out with that big wick down there on that hourly time frame, but that remains still bid. The 20-hour there, 103.50 now for the euro today. Any questions, anybody? Let's have a quick check. Not okay. So that's euro, and sterling has recovered the vital 125 handle as well. Similar sort of performance for the euro. Woeful last week, all the way down to 123.50. But we're now at 125.50, so a big 200 pip recovery from our lows we saw here at the beginning of the new year on very low volumes, obviously. So that's all been bought through. Some significant volumes coming through today. So not quite back to normal, as many people still on holiday, but excuse me, much more of a normal situation. And let's say the dollar was being sold off earlier, but that's come back on the back of Trump's comments and the US traders getting their feet under the desk. Remember, let's actually have a quick look at the calendar actually now as we go forward, because it's a key week, as I said earlier. Let me just do some filters on this. All due respect to you in Russia and Brazil, I don't want them on my. Okay, I'll call it India out. It's up there. I mean, of the 2 and 3 bull bears for the week here. So PMI data today, services PMI. So Europe's generally better than expected. Bit of disappointment out of US, else the movement we've seen in the dollar and the stock markets moving high, yields also weakening on the back of that potentially. I actually looked at them, so I'm assuming that's what tends to happen. But we'll have to have the charts. Tomorrow, final reading of, preliminary reading of December's inflation release for Europe. It's a big news for Tuesday morning. And then we've got the more important ISM service PMIs. I've got them non-manufacturing PMIs, but that's what we've got tomorrow, along with JOLTS report. So we'll be live for that tomorrow from 2:45 for the 3 o'clock, 1500 hours announcement. Get a bit more prep in tomorrow for that. So quite a big day again tomorrow. Manufacturing PMI, services PMIs and non-manufacturing PMIs out of the US on Tuesday. Remember, we've got a shortened week because the US is closed for Jimmy Carter's funeral in the US. So it's a holiday, not a holiday, but US markets will be closed. Forex markets will still be functioning, but US cash markets will be closed on Thursday. Before that, on Wednesday, we have the typical pre-non-farm payroll week. So Wednesday sees non-farm ADP, NFP, non-farm employment change. 130,000 is expected, down from about 146,000 last time. German retail sales as well, and factory orders. Factory orders, keep an eye on earlier in the day as well. They've been woeful recently. And then we've got the initial jobs claims. They're actually coming out on Wednesday. They normally come out on Thursday. They've been brought forward because of the President Carter's funeral. The other peripheral data, the ongoing claims, they all are still scheduled for release on Thursday. But just keep an eye on that, see how that pans out. The event of the day still remains although it's backward looking, everybody knows what's been said. And people of the committee have had their say publicly since the meeting, but the minutes themselves, I always say this every month or every time these minutes come out, or any of the minutes come out, it's what's actually documented for posterity So it's what was said, what wasn't said, and so that's why they still remain a high event, even though it's a sort of a backward-looking event. So watch the FOMC minutes. I'll be with you live for that on Wednesday as well, 7 o'clock UTC GMT time for that on Wednesday. So Thursday US markets close, so maybe some spiky volumes or strange volumes on Thursday. So watch that on Thursday. Not a great deal of data on Thursday. Saying these initial job claims are scheduled now for Wednesday. What actually happens with those? Some Fed speak as well on Thursday, and then Friday is obviously the event of the week. Many say is the event of the month. Non-farm payrolls. The headline is what everybody gets attracted to. Remember that bluster of 227,000 last month. The month before that, we were down at 12,000 because of the series of strikes that were swirling around. The impact of those two major hurricanes as well was still stuck in the data. Obviously, we've got a massive storm in North America now at the moment, so that it's not going to impact this month's numbers on Friday. So Friday's numbers are the first clean month we've had for a couple of months. So there may be some follow through for next month's non-farm payroll if these storms persist. But there's only one due so far in the US. So watch the average earnings. Are they going to tick up again, showing the stickiness, feeding through the stickiness in inflation? See that, watch that number, 150. It says 154,000 here on this calendar. My Reuters feed is talking about 150,000. So this might be the Bloomberg. I'm seeing the Bloomberg poll at the moment, but we'll have that obviously for you on Friday. Participation rate, and then the other one I watch particularly is this U6 unemployment rate, the wider measure of unemployment in the US. Ticked back again last month, 7.8%. It was down close under 7% at one point. Obviously, the headline unemployment rate 4.2% out the US. Also, Friday is unemployment change for the Canadian economy as well. They may be without a prime minister by then, but we'll see. So dollar CAD could be interesting moves as ever on non-farm payroll day when the Canadians are also announcing their data. So watch that one on Friday. But I say lots to do before then. So that's the week, first full trading week of the new year. What are your plans, guys? I hope you planned some ideas in play 2025. We've got. We had our very successful festive 25 promotion ahead of the new year. Expired on the other day on January the 2nd. Our current promotion just kicked in this morning. We're calling it Thank You 25. So sorry, 15. That's a 15% off our standard prices for our challenges. So do join us. As I say, this is the 10,000 one. It starts from 5,000 at only $55 with 15% off that. But if you want a bit of, not too big, not too small, 25,000 is a nice one to start with. $175 less 15%. We'll see it down to quite a nice saving on that one, and it gives you the flexibility to have a bigger account, to have a bit margin, allows you to take more trades, not necessarily more risk, absolutely not more risk, but it opens up opportunities to some trades which might not have been available to you if you are following the rules quite strictly. And you've got to follow the rules quite strictly because that's what prop firms do to you. They give you the restrictions. What you've got to where you perform. You need to make 10%. You need to make 5% on the second challenge. You can't have too much of a drawdown. Drawdowns 10%. Maximum daily loss 5%. Lots and lots of traders, both inexperienced and experienced, they let these rules get out of the window, and it's rules like this that's kept the professionals, the people you see on the Twitter handles or your X handles or YouTube all the time. These are the rules, or not these particular rules potentially, but own rules. They stick to them, they understand them, and they play by them. And that's what the prop trading industry has brought to the market. And at the proptrade.com, we're very proud to be part of that, and very proud to be on your side and helping you, all the way to a $200,000 account and millions beyond that as well, if you can prove yourself into the funded account. So give it a go. 15% off currently. It was 25% off if you don't run before Christmas, but there we go. That's our New Year offer for you guys. So let me just leave you with Bitcoin, and let's do Bitcoin first. Here we are, back over 100,000 today, or on Friday, I should say, and looking quite strong. So the dip we had, sorry, it's the hourly, isn't it? I mean, I did mean today, sorry, daily. Today we've gone back over 100,000. So as we said last week, our break of the 20-day moving averages here on the second, on relatively good volume as well, actually. Although the candles weren't massive, it was still very positive. And then the fourth day here, where we broke the 50-day moving average as well on the third, was very positive. So Thursday was the third was the day of the break of the 50-day moving average and confirming the 20-day moving average. Then we followed through there. Friday was up, and today we're back through the $100,000 handle, and that's now, what's that? That's looking like 6 consecutive days, isn't it? 1, 2, 3, 4, 5, 6, 7. So as we suspected or suggested, the significant buying and interest here at this key 92,000 level here, this 2 candle low here, not quite a tweezer bottom, but it, more importantly, it corresponds to this resistance as we were going up to the 100,000 for the first time back in the middle of November. So that's played out quite nicely. Might be forming a bit of a head and shoulders here, but so we're careful on that. Well, at the moment, it's good to go, or it's been good to go for a few days now. We're into our 4th day over, and we're through the psychological 100,000. We're trading at 101,000 now. So Bitcoin remains bid as it has done for the last 5 or 6 days. 7 days, in fact, can't count. There you go. Well, I'd say 5 days since we've got into this one, since it turned around, has dipped down the 95, 92,000, proving quite a key support area for Bitcoin. And finally, gold, which we were short on that. Those of you that were with me saw short developing as we were closing the session, didn't we? So it was here, wasn't it? Friday morning I did a week ahead. It was very what I said, it was just, it's not a wasn't a significant break of the 20-day moving average. So it opened with a very small position, just a tentative position, because it was like the 4th or 5th hour to the downside, and we did reverse. We had our stop loss. Initially it was up here. I'd pulled it down later on in the day to here. So we did go against this for a couple of hours, but then the big move down was after lunch on Friday, and we continued to decline through the 20-day again, through the 50-day later on. That was our initial target here, 26.46. Remember, it was the one that this line was already on the charts, and I couldn't remember why it was on there, and they're usually still on my charts for a reason, so I was happy enough to have that as my initial target. So we took 80% of it, closed 80% of the trade out there, and then we closed it on close on Friday down here at 26.38. I think it was a 40. I can't remember what price it was actually filled at, but that was the close of the day. That trade closed out. Well, as you can see, we went up, and again, the 20-day or the 20-hour has been good to go for the shorts here until we got that Washington Post news this morning. But then we rallied, so that would have, again, the system would have triggered a long trade, but instantly sort of stopped out as it went crashing back through here on that short term. So that would have wiped out. It's quite a big loss on that, I think, on an intraday basis, but again, a short volume position, because that was on the news, wasn't it? The news of perhaps this in the Washington Post, and what the man himself says, he denied it. We were back down again, and we remain down. So overall, the news blips of the PMI data, the Trump's comments, the post in the Washington Post. Overall, as we stand, we're still back under the 20-hour moving average, and we're still trending lower here on this hourly basis. If we go on the daily time frame, places to look for the gold market. So we were up Thursday, down Friday, we're down again currently today, and again it's the 50-day moving average that's proving resistance. So we're still generally in a sort of sideways consolidation mode here for gold. So it's nothing to get too excited about currently. Things may change, may not change, and that's, you know, the art of trading is to be patient and follow your systems and follow your strategy. But as you can see here, 50-day moving average more or less horizontal, 20-day moving average a bit more blippy, as you've caught these ups and downs, but still very much sort of consolidating mode. So the big line in the sand remains the 2600 level here, this big yellow line down here, and then the other, if we're going to move lower, we need to breach this low that we got on the 14th of November at 2540 zone to the downside, then 2560 before that, but 2600 is the big support area. And then to the upside, the 50-day moving average needs to break at 2650, and then the round number at 2700. We've done a couple of times since November, but we haven't been able to hold it, and those intraday highs still sit there at 2720. So that's the broader, higher time frame outlook for gold. So basically a bit of a consolidation mode in those higher time frames. Lower time frames, let me know if you want to have a look at them. We'll look at them in more detail. If not, no worries. We'll see you all tomorrow for the JOLTS data and the JOLTS data and the ISM non-manufacturing PMI data as well for 3 o'clock this time tomorrow, basically. So take care, everyone. We'll see you soon, and have a good trading day. All the best. Bye-bye.